from property consultancy Colliers International Thailand and Myanmar have outlined 4 main reasons causing the high prices of real estates in Myanmar. And Myanmar Focus Daily will have the details on this story in this episode.
The first reasons the analysts mention is the tremendous demand for office spaces and hotels, but the supply is very limited and lacks of quality.
You look at offices and hotels, there's been no real new supply since 1998. That's a long time. It's 15 years in a pretty static market. So suddenly there's this new demand, and property market historically responds slowly because it takes 2 to 3 years to build a building of any size. So you have this gap now. So we're beginning to see new supply come online, but not a huge amount, but enough to absorb some of this over demand, if you like.
Another analyst from Colliers also pointed out the limited infrastructure and transportation as another factor that brings the prices of office space and hotel rooms up in Yangon in particular.
I think it's also one of the issues is one thing about Yangon that's very interesting is and compared to say Bangkok. In Bangkok you have obviously prime areas, like say Wireless Road, etc. And then once you move away from that, the price of land goes down, but not dramatically, because if you're on the BTS and you're a few stops away, it's not so. Sometimes it's more attractive for some people. So the prices go down, but not dramatically. In Yangon, because there's limited infrastructure, there's limited sort of decent roads, the public transport is very poor, you don't have motorbikes because they're banned, then certain areas are very prime. So downtown is prime, and along the main arterial roads is also prime. Once you get away from these areas, it becomes far less attractive for most real estate. It basically means you don't have access to the main roads, the bus lines, the facilities, the various facilities. So it becomes far less attractive, and then land price drops quite dramatically.
However, for land, prices are high even though people are not transacting that much. It is more of local-to-local transaction because it is a form of investment for Myanmar citizens.
And our explanation is that at the moment there are so few investment alternatives for wealthy Myanmar citizens that they tend to see land as a safe investment. They're not really always looking at the development potential. They're often looking at it as a store of wealth.
Yet, land prices around special economic zones, especially the Lawa Special Economic Zone on the outskirts of Yangon, have been increased due to development or agreements to develop the areas.
But the land prices tend to be, in all these type of frontier markets, they go up and down quite dramatically on the basis that something's going to happen in that area. So when someone says a bridge is going to be built on the other side, that's going to connect the other side, the prices go up dramatically to reflect that, and we see that a lot in these markets.
Next episode, we will look at the price inflation in other areas of Myanmar apart from Yangon, the new supply coming to the market, the projection of real estate market in the future, as well as suggestions for investors in coping with this issue. Aravitang Misang reports.